Good morning. Welcome to the Executive Intelligence Summary for March 2nd, 2026. We're tracking a major geopolitical flare-up in West Asia, and, its immediate shockwaves are already hitting India's economy. We're also going to cover some key domestic signals, both of resilience and some important regulatory shifts.
So here's the operational roadmap for today's briefing. We're going to kick things off with our lead story. That's the U.S.-Iran conflict and its impact. Then we'll dive into the key macro and governance updates, followed by corporate intelligence. And finally, we'll wrap up with the Editorial Digest and a snapshot of the markets. All right, let's begin. Okay, starting with our lead story, a really dramatic escalation in West Asia. And this has created some immediate and frankly severe problems for India on multiple fronts. Everything from our energy security to aviation.
So what's the core situation? It's this. On February 28th, a joint U.S.-Israel operation resulted in the death of Iran's supreme leader, Ayatollah Ali Khamenei. Now, Iran's response was swift and it was huge. They've announced they intend to close the Strait of Hormuz, which is an absolutely critical maritime choke point. This action, well, it raises some acute risks for all major energy importers, and especially for India. Now, this slide right here really quantifies our direct exposure. In the last fiscal year, a staggering 54% of our liquefied natural gas imports passed right through the Strait of Hormuz. And for crude oil, that number is nearly half of all our imports. It just goes to show you the acute sensitivity of our energy supply chain to any disruption in the Gulf. And you can see the immediate operational impact goes way beyond the seas. The airspace disruption led to just massive cancellations. On March 1st alone, 440 flights were canceled. That's on top of 410 the day before. It has effectively crippled key air corridors. Now let's turn to the domestic spillover here at home. The effects of the conflict, believe it or not, are already being felt in our civilian systems, in public order, and even in domestic politics. The crucial point here is just how tangible these effects are. The Central Board of Secondary Education, the CBSE, has already postponed exams for students in West Asia. Here at home in Kashmir, we're seeing heightened security measures and protests linked to the killing. That's prompted a 2-day closure of all educational institutions, really as a precautionary measure. All right, shifting gears to Delhi politics. App chief Arvind Kejriwal, he's reappeared publicly just days after being discharged in that ongoing excise policy case. He's presenting the court's decision as a total vindication, and he immediately issued this public challenge, really doubling down on his claim that the entire case was fabricated from the start.
Now let's take a look at public funds integrity. A new data report is flagging a significant concentration in how MPLAS funds are being spent. That's the Members of Parliament Local Area Development Scheme money. Specifically, when MPs spend it outside their home states. As you can see, Uttar Pradesh received over 84% of this spending. And get this, one Rajya Sabha MP associated with Jammu and Kashmir directed over 95% of his funds to installing LED lights in UP districts.
Okay, over in the corporate sector, we are seeing some swift and pretty decisive responses to both the geopolitical crisis and some of these domestic regulatory changes.
Right, so in response to the Hormuz closure, Indian refiners have immediately activated their contingency plans. The Petroleum Ministry is consulting with them right now to assess all their existing inventories. At the same time, they're actively scouting for alternative crude sources from Africa and South America. Analysts are also pointing out that a pivot back towards Russian crude, which might be available from floating storage nearby, is also a very viable option.
And connecting back to that aviation chaos we talked about, the financial hit is substantial. We're talking an estimated revenue loss for Indian airlines of around 500 crore rupees. This directly impacts major carriers like Indigo, which, holds a huge market share. For a company like them, West Asia represents about 15 to 20% of their daily revenue. So this is a significant blow to their near-term earnings for sure. But amidst all this turmoil, there is a positive signal coming from our domestic tax base. February's Goods and Services Tax, or GST, collections stayed strong. Gross revenue hit 1.84 trillion rupees. That's an 8.1% jump year on year. And that does indicate a degree of underlying stability in the economy. And on the regulatory front, it looks like the market watchdog, SEBI, is sharpening its enforcement. The chairman, Tuhin Kantapande, has made it crystal clear that the regulator is going to be leaning more and more on AI and technology to crack down on market manipulation. And their focus? It's squarely on these finfluencers, making unrealistic promises, and on fraud rings that are operating through private social media groups.
All right, let's turn to the opinion pages. We've got two pretty distinct perspectives on the major events that are unfolding. One editorial is focusing on that geopolitical crisis in West Asia, while the other is looking inward, addressing a structural economic challenge right here in India.
So, on one hand, an editorial in The Hindu is framing the strike on Iran as a dangerous war of choice that's being driven by Trump and Netanyahu. They're warning that the closure of the strait could trigger a global economic shock. Now, in stark contrast, an editorial in Mint argues that India's real vulnerability is actually internal, an innovation deficit. It points out that our R&D spending has been stuck below 1% of GDP for decades, and it's way too reliant on the public sector. It's a huge contrast to innovation leaders like Israel and South Korea.
And now we're going to conclude with the verified market numbers from yesterday's close. This will give us a final snapshot of the financial landscape.
So here are the closing figures. The Sensex stood at 81,287.19 and the Nifty at 25,178.65. We did see net selling from foreign institutional investors. They offloaded equities worth 7,536 crore rupees. And in the currency market, the euro closed at 107.31 rupees. That concludes today's briefing.